What's going on, everybody? It's your boy Forex Funded coming at you with another weekly analysis for this upcoming week, August 10th, 2025. As always, links in the description to our chart analysis service where you can receive all of my trade entries, all of my trade analysis, all my breakdowns, all my videos throughout the week, etc. Best part about it, there's a free 7-day trial so you can make sure that I know what I'm talking about. So jumping right into it, if you watched our video for this week that we just finished, we were expecting price to touch our 34.15 long-term support resistance area mixed with these four other failures at that level, right? We were expecting price to come tap up into it, into the 34.15 level, likely the 34.30 area, and honestly probably see a rejection. It's happened 4 times now, and until we have a big fundamental driver, we will probably not break it. As I've been mentioning for the past couple months now, the fundamental driver, in my opinion, that we know about that will break us out of this big consolidation is going to be the interest rates being cut, right? A rate cut is bullish for gold. So whenever we do get our rate cuts, we should have no problem getting above 3,500 and then just coming to attack, closest area after that will be the top of this $160 range, which would be 35.75, right? 34.15 is the top of the current $160 range. Once we break into it with that interest rate cut, we should be able to attack 35.75 and possibly higher, right? Now, this week, we had a bunch of good trades this week, but unfortunately, like I mentioned, we weren't able to get our 34.15 and 34.30 push, right? Now, near the end of the week is when we ended up getting that bullishness. You can see that market opened, and we pretty much were just sideways up until, Thursday and then Friday. It's becoming more and more evident to me that the big boys, the market makers, are wanting to price in the very high probability that in September's FOMC that we end up cutting our rates. So that is one possibility for this upcoming week if this volume does continue and they do price in that rate cut, that we could see basically a pretty straight shot all the way up to, I would say, all-time high, which also happens to be the midpoint magnet for this $160 range. Now, on the pullback side on a daily, so we have this prior higher low to whatever the high ends up being when we have a pullback, right? Maybe the big boys want lower prices so they can buy at a discount. If this is the high, for example, if here, wherever the high is, when we start breaking down on lower time frames, you guys know me, I'm really going to be targeting that 50 to 61 golden zone, right? So for now, this is where it would be. We'll keep a box there. If we need some pullback to continue higher, that is where I would look for the buys, and my first main target would be the prior highs, wherever we end up topping out. Now, coming down to 4 hour, it's really not going to look, much better. You can just see the sideways consolidation. Then when you finally broke above those body highs, meaning over here, you started to use that area as support again, and it'll just be a test, in my opinion, come market open, if we have a gap below this 33.83 zone, or if we just gap up, right? Now, we can gap, below. We can have some kind of pullback that doesn't need to come all the way down to 33.38, right? We can have a fib from these lows to our highs, which is what we were using all of Friday, right? All of Friday, we were holding on to 50 and then to 61. At the end of the day on Friday, we retested 61% again, closed above it for 4 hour, which is what you want to see. And it's a nice show of bullish strength. So it is possible that we don't see any more bearish pullback. But if we do, this is what I would be targeting for now. Coming down to 1 hour. So 1 hour is where I like to get most of my trades. For example, right? Here is Monday, right? Using the lows that we had from Friday to the high of Monday, you can see you came back. You almost tapped 78%, but then you had a big bullish push, right? I didn't get active here. That's fine, right? But that's just where my fibs were. This push made a fresh high. So you go from your low to your high and you wait for one of your fibs to show reaction, right? Whether it's an instant rejection, whether it holds it and then you have a reaction. That's stuff you can learn if you're in the chart analysis. Here we had a 786 hold and then you had a push up, right? You did not make a new high. So this lovely fib that we have is not going to be the same over here, right? What I mean by not the same is that fibs are the most strongest, in my opinion, when you have a fresh high with the move. Here you didn't have a fresh high, right? But what you can say is we topped out for New York session. So Asian session came, pulled us back. Well, end of New York, pulled us back. Asian session held on to our 50 and 61% levels like a charm. And then we ended up pushing and breaking that high. So your entry would have been around the 50. Your stop loss would have been below the 61. And then you would have given it, I'd say, about 20 pips of room to breathe, right? Same thing. That was a higher low. We made a higher high. Same exact thing. You held 50. You can see when you tested it, your hourly candle closed above 50, so you could enter on that next hour with your stop loss below the low and then give it some room to breathe. Right? Here is a tricky one because the same type of fib, meaning the higher low to the high, it came all the way back, right? You might even argue that maybe you would have taken an entry based off of the rejection of 78%, which if you're following what I'm saying, what I said about, okay, you rejected it, so here you buy. That next fib level you use as your stop loss, and then you give it 20 pips, right? So give it 20 pips. You would have been fine. You would have rode up to a fresh high. You could have been targeting the prior highs, and you could have been targeting your inverse fibs. It would have worked out, right? But for some people, that is very tricky. At the same time, if you would have pulled it down to this low here, the reason why you can pull it down to this low is because you can see none of these broke the structure high. This is the structure high. You broke it with this entire extended push. So there are multiple places you can put fibs that are valid. You just can't put them from random points, right? And in this instance, you can see you held 50, then you ended up breaking down towards 61, and that same 20 pip rule would have worked, right? You would have been able to get that buy up, and then that takes us to where we are right now, which is just me recapping for you guys. Here, you made a fresh high. You came to 61. You didn't have a good rejection of 50, so you wouldn't have bought. You didn't have a good rejection of 60. You wouldn't have bought. But you did not come all the way to 78, and you had a nice bullish close. So that your entry would have been here, stop loss below here, and you would have targeted the highs, and it would not have been reached. But that still would have been 100 to 150 pips if you would have bought that open, and where all those hourly wicks are is 120 pips to the absolute highs of 160, right? That's really as simple as my strategy is. Like I said, if you're interested in more of that, join the chart analysis. The reason I preface all of that is this price action right here is really fucking messy, right? But say we do get that push to the upside. What we're going to do is say the push just happens right here. Boom. You make a new high. We're going to target the higher low as the entry. So Assuming none of this price action changes, assuming this is your low and your high is somewhere around here, you're going to pull your fib out. You're going to look for respect of any of your fibs. My favorite 3 fibs are 50, 61, and 78. Occasionally, I will use 23 or 38, but I don't like them that much. Other than that, everything is just stock form of fibs, whatever, how it comes on TradingView, right? So ideally, that's the type of entry we would look for, right? I'm not going to buy at open. I'm not holding over the weekend. I'm not doing any of that. But I am still bullish, right? And on top of that, you can, if trend lines are your thing, you can say that you have a bullish trend line here. And it's not pretty, but it's the truth. There's our bullish trend line that you broke and then you held. So we're still very bullish if you look at it from the eyes of someone who likes to use EMAs as trend confirmation, which is what I have them on my chart for. Trend confirmation and support resistance. You have your green cross your red. The green is the faster EMA, meaning this is your flip to bullish. You're still bullish on every single time frame. Every single time frame, EMAs are bullish, except for maybe like 15 and 5. Those lower time frames, which are more reactive, it might be, so you go bearish, you go bullish, you go bearish, you go bullish. I don't really give a fuck about that. I care about like 1 hour, 4 hour, daily, all of those. Nice and bullish. You can see we were hugging this is 21 EMA. There's your little gem, 21 and 50. We were hugging 21 EMA all throughout the week. Sign of support. In terms of the daily, just broke straight above it. But, that's what I'm expecting for this week. I analyzed, I reworked some of our entries from this week so you guys can understand my methodology on trading. I told you guys what I'm expecting. I am expecting price to either break up, and on the pullback, I will get an entry with the fib, or maybe we need some pullback, right? Maybe the big boys want to push price higher, but maybe they want a better entry. That's fine, right? We wait for one of our 2 things to happen, and then we execute based off of that. Right now, Friday did have some really good movements, but for the most part, this is a scalper's paradise, and I don't like to classify myself as a scalper. Right? I like to be able to hold my trades to their completion. However, if the given price action is telling me to get out of the trade, I have no problem getting out. I have no problem setting the stop loss at break even. But I'm not in the trade only looking for 20 pips. I'm in the trade looking for that good risk to reward. And on top of that, I'm looking to take price to fib extension, right? And what I mean by that real quick, if we use this fib, because I don't want to make a new one, but I talked about it over here, how you went up to 27, right? I talked about it here. An ideal trade goes from your 50 or 61 to your first inverse fib. And then over time, it could end up hitting the other ones, right? We came to it. Negative 27 inverse fib is 409.5. Our high is 409.10. So you hit it exactly and fell, right? So if we ended up using this big 50 fib, this big daily fib, I'd be expecting 34.47, right? That'd be my first real big target after the highs are broken, followed by 34.96, followed by 35.50, which if you know anything about anything, those levels are already marked up for me for different reasons, right? Because we have a high, we have a body high, we have the prior high and all-time high already marked up. 2 of them, right, being the high, the prior high on daily, and all-time high are at quarter points of our ranges. And the 50 level, 35.50, you guys should know that's a key level, the nice big round number, 3,500, 3,550, 3,600. So that's enough gems for you guys. Hopefully you guys had a nice profitable week. And as I said, we have our chart analysis Discord. All you got to do is click the link in the description of the video, sign yourself up, right? It is a paid Discord, but you have a free week trial. You can sign up today, you can sign up on Saturday, you can sign up on Sunday, you can sign up on Monday. Whatever day you sign up, you get 7 days. You can trade with us all week next week for free. If you like the value that I provide, if you like the pips I provide, if you like the way I try to educate you, stay for longer than the trial. If you hate it, if you think I suck, if you think you can find better, if you want better, whatever the case may be, cancel, right? But hope you guys have a wonderful weekend, and I will see you guys on Sunday.